Good afternoon and welcome to Options Center. It's Monday, May 6th. I hope you had a wonderful Cinco de Mayo and may the 4th be with you. We'll call it Star Wars Day. So thanks for joining us. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo and subscribe. I'm going to go through most of the time here on SPY. We're going to spend a lot of time on the daily and then go down to the 65, spend some time there and really give details on what I think is happening. So Friday was a bullish day. We gapped up, had a pause candles, possible, topping candle. But Monday, as I mentioned constantly on this channel, it typically follows through with what Monday does. And we did so. We gapped up again today. And we're gapping up at it on this chart. We're gapping up over support. So if this support at 513 holds, then maybe we have a direct shot over here at 518. That's a very important number, and we'll look at it on a 65 minutes, so make sure you stick around. And all these videos kind of coincide with each other if you're new, so make sure you hit that notification bell. As we get new information, we put out new videos so we can tweak the direction of where we think the market has a probability of going, the greatest probability. And believe it or not, I really am starting to think that 518 is... I was unsure, but now that we had this next move up, I think that 518 is kind of the end. It's our third target. I think that's where we get to, and I'll show you how. I do think this is a possible top candle for the near term, in that we make a higher low and come back up to 518. That is one possibility, and I think that's a greater possibility now. So if that's all you want to know in the video here, and then if you want to stick around and you're a short-term trader and you want to see how I got to these things and learn educationally, then stick around. So let's go over a few of these indicators that I have tacked up top here and see what's going on in this time frame. And remember, I have this green, we put this support zone. I think that's where we test when and if we break down from the support here, that rising trend line. Where did I get that? We zoom back here, you see this large consolidation area. Consolidations, you have a lot of trading there, you have a lot of volume, and I'll show you the volume indicator, the profile. And so it creates support and resistance. You have support, and those anywhere in between can become support with the volume here and traders letting go or entering into their trades. So we also have support area here, consolidation, a smaller one, and so that could easily be support right here. But if price wants to spike through, maybe a sort of a capitulation, then perhaps we make it all the way down to 462. There are lower levels, but this is seems to be where I think price is most likely to go. It also with the 200-day moving average, and if we get down to the 200-day moving average, it's probably going to be right around with this support area here. But it's not typical for price to reverse immediate. You might get a reaction and then lower low, but it's not typical for the MAs, the moving averages, to hold price. Usually there's some sort of spike through it. The market wants to make as many people lose money as possible, so it can even come short of the 200-day moving average reverse and then come back down. Many different ways that it can happen, but I think this is the area. And as we go throughout these videos, as time passes by, we'll see if this is where our target goes. And I'm going to show you that pathway down to this target and show you what I think is likely to occur. Okay, on the daily and on the 65. So here's some of our indicators. We have our options tender set of this is your very standard MACD, RSI, and stochastic, the slow stochastic. And, we made a bullish reversal on the slow sto. It's a much more sensitive indicator. And so we're bullish on the very short term. We're just bullish. We have that crossover, but we are getting into oversold area. So we have to be very careful. We had a bottom here. We're making a bullish cross. All of these things are kind of going bullish. I think we're going to make a lower high. Don't get me wrong. I'm a bear down to this target, right? But I think these indicators are leading the bulls in here. We make a lower high and then we dump into those targets. We also have our reversal, which still uses the same two MACD, RSI. Notice we're getting into just overbought territory. I think that might mark a really short-term high here, and the dip will be bought. And I'll show you when I think that scenario is wrong. So we're getting overbought in the Williams R percent as well. So again, it's not a sell signal on the Williams R in the daily time frame until we cross back underneath this 20, the negative 20. But I'm just showing you some indicators, what I use. The awesome oscillator, it's in negative territory. We have some green candles going up, but as this moves up and even to our target, we're probably just going to be testing back to the 0. And then we'll be looking for red bars to head back lower into our target zones and possibly even a positive divergence. We'll see how that goes. And, by that time, we'll be looking at the weekly time frame too, because if you start building positive divergence when we get down to lows on the weekly time frame, we're looking for a heck of a bounce, probably a few weeks of a bounce down from these levels. Okay. That's why these indicators matter. No DMARC doesn't matter right now. Bollinger Bands. So we take a look at these Bollinger Bands, and let me just take that one off here. So our Bollinger Bands give us a good sense of what's happening. You have the middle line here. That's the 20 simple moving average. That's the middle line of this Bollinger Band. Okay, you have the 8 EMA that's going along in here too. But this is the standard deviation lower, standard deviation higher. Well, it just so happens that standard deviation is going to be right in that 518 zone pretty soon here. So it could very well happen that we test this 20 simple moving average once again. If we hold this, if you use the Bollinger Bands, we hold that middle ground there, then I think we test the top, and that would be a beautiful sell signal with an RSI. That would be a trade setup if the RSI in the daily time frame is overbought, and we're at the upper end of a declining Bollinger Band, then look out. I think that's going to be a great sell signal up there. We start breaking underneath the 20 simple moving average, and clearly the trend line down here where we're triangulating. That's all we're doing is we're coming into an equilibrium, and you'll see from this volume node, give you a perspective. That's what happens when you have trend changes is you have your initial move, you have your wave 2 or wave B pullback, and essentially you're just consolidating into an equilibrium where price has to decide if it wants to continue higher or continue lower, or I said continue, but move higher or move lower at this point. Okay. Now going to the volume profile, we get a nice point of view. Not like that. We pull back a little bit here. Okay, so you see we're coming into this equilibrium. That's beautiful. You see all this volume happening in here where you have this, that's where our bow and arrow support resistance would be, and we're above it right now. Doesn't mean that we can't gap down tomorrow. It's turnaround Tuesday into tomorrow. I think we have our near-term high, and I'll show you in the 65-minute why. We break back down, test those areas, and that would be a nice volume right here. So we're looking at about the 506 to 504 zone. That coincides with the 20 simple moving average. That also has the kind of the bottom portion of this center as price kind of gets really tight and coils up. That's a good node right there at about the 506. So if we go back to the support and resistance, you notice this is a gap here. We have a gap here. The gap closes. I'm looking at the candle, this reversal candle. The close of it was 505.03. So you notice that's right in the middle of our zone with the gap close there. So between 506 and 504 will be our support zone that we're looking for to hold in order to get the bounce back higher going into the end of the week. Now, we don't have a whole lot going on, but I think this might be a very good example in the weekly, I call it seasonality of the week, to where Monday had our follow through. We pull back and turn around Tuesday. And then Wednesday, we'll be looking for some sort of low in that 506, 504 area, possibly testing the bottom of the trend line here. And then once again, making a slight new high to fill out this triangle to the apex just a little bit more. Great sell opportunity, and we start heading lower. And so if we get Thursday morning is really the only catalyst for the unemployment numbers, and that typically Thursday just typically happens to be, when you're in an uptrend, happens to be a bullish day. So we'll be looking for Thursday to probably gap up or so, get into Friday, nice move up, and then Monday following through with what Friday's doing. So we'll be looking for the Friday follow through into Monday, and then turn around Tuesday again into next week. And then we'll look for lower prices at that. So that's just kind of a projection. That's a guess of how things could go. So let's pay attention to that. It can go any which way, but that's my best guess. Now, for those that are new to this channel, I'm going to show you the pathway that we're looking at. We've been riding this move up with a expanded ending diagonal. This is a blow off top. This is a major top here, and we're looking for much lower prices. Now, we do have an alternate scenario to where we hold those points where we were talking about, and then we get a new high. So we have to be careful of that. That's what traders do. You have to look at both points. So, but looking at our primary scenario, we're getting our 1, 2, 3, 4, 5 wave move up. That's a tremendous selling point that we got there. It took some time to happen, but we got it, and now I'm looking for a lower high, and at minimum to get down to these points. So you see the former highs here that coincides with what is this extension here? That's my new target tool that I'm using on this pullback. So we can look at this a couple different ways, as this being an A, B, C, or a 1, 2, 3, and then 4 and 5 lower. So we'll look for a 3-wave move or a 5-wave move down. That will say a huge, that will give us a lot of information on what happens next. So this being an A, B, C, or 1, 2, 3 doesn't matter. We're still looking at this target. So I'm just kind of projecting this target to complete around that 518. So this is where I have it projected right now. If we reverse from here and we just continue lower, then I'll move these projections, and then we'll probably get a little bit lower price because it's more bearish. But for now, I want to keep this about the about 518. And so we're looking at 466 being that extension from this move. And that leads us right into that zone where I was talking about with the 200-day moving average, the bottom of this consolidation, that huge consolidation back where the former all-time highs were. that's right into the zone. So just another tool to use to project price. And now, before I flip over to our alternate scenario, I want to show you our alternate target to the upside is the 561. And it's on the other board, but the other board is going to be a lot more messy. I have time relationships on there that we're going to take a look at right now. So this I would consider an ending diagonal where we get a new high here for wave 5. If this the scenario that plays out, here's the zone at the 562, just under, that I was talking about. So that's this turquoise target up here. All right, where this would be a an ABC for 1. We get an ABC for 2. We completed wave 3, and we're looking for lower prices for wave 4. And it's not unusual for wave 4 to cross over wave 1 in an ending diagonal. So that just so happens to be the 62% retracement, as well as a couple other retracements. So that's a big zone there to look at, and it matches exactly with what we were talking about. So you have the 50% retracement around the 466, and then the 62% retracement down by the 450, between 450, about 453, we'll call it. They're always zones, you guys. So I don't want to talk about pennies, down to the penny or anything. So digging in here a little bit closer, now we have time relationships that we match with price. So we had our 429, April 29th. We got our near-term high right there. So I'm going to hide that. That was our near-term high on the 29th. We got our pullback. And then we got our low on the 2nd. Just so happens. Okay, so I'm going to hide this one too now. That's already completed. And guess what? We're coming into 5-7. And also on the lower time frames, you'll see that 5-6 and 5-7 is a cluster of time relationships on the lower time frame. So we'll match that up. That's what we do. We match it up with the daily time frame, which are much more important. The higher time frames are much more important. So we have the 5-7 where we're likely to get a top, or to just grind very slowly and get another top possibility at the 513. I think that's less likely. But if we hold the 413 that I was talking about, the support, then that's gonna end up being, maybe we get an ending diagonal that just grinds to the upside with. But I don't think so. 513 is on Monday, next Monday. So I think that's a lot of time to just kind of grind to the upside. I think we'll probably get a lower high and then go test back up there. And I talked about it on Friday. It's we'll talk about the pattern that is on the lower time frame. So we're looking for a time relationship as price goes higher into tomorrow. I think that's going to be a near-term high. So we'll check back on that tomorrow. We'll do another video. All right, let's go ahead and go down to the 65. A lot of good information here. So first we'll start off with a traditional technical analysis. We had this massive move to the upside, that wedge, that to complete that blow off top here. And we're looking for our initial move down was sort of a flag pattern. We had that channel going down here where we only had 1 point at the bottom, but this is a good trend line to the down trend line here where we had 1 point, 2 point, 3, 4, and a couple, cluster there. But so it's a very valid, and we get price gapped up over it. And as a matter of fact, gapped up over support as well at the 509 and continue to the upside. Now what? Why are we possibly reversing here? And you can already see that I already have a projection out here for you. But we have 2 points at the bottom here, and we made a channel out of it where we touched this point, and we're now having a hard time getting above that point here. I think we reverse from here because of the channel. That's going to validate this channel, and I think we go test the top of the channel. Look where everything comes into play here. We have this former trend line up here. That was from a large wedge. I'm not going to show you it from the bottom, of 2022. So what I did with this top, projecting that this is going to be a good reversal zone, is the top of the triangle. And so we have 2 points that it's touching so far, and that's heading out here. And it just so happens to just about on Monday have the top, this declining trend line, that would coincide with this, the top of the channel. You have so many coincidences here with this area of price action. Now, I just don't see how price can just get there unless it just grinds along the top of the channel, fake break. I don't know, but the likely situation is that we just get a higher low, higher high, and make one more last high, which in the larger schemes of the things would be the our last target, and it would close the gap here. Let me bring this gap about so we can see. That would be the top of the gap, just slightly above. So we close all the gaps, and then we head lower from there. This is a big bear flag. We're just filling out a bear flag. Can this be the top here? Certainly. What this is doing and how we'll know is this channel that we have drawn here. I think we're going to try to back test that channel. We don't have to get all the way down to it, but that bottom of that 504 zone that I was talking about. So 504 is the options expected move. Well, I expect to see that options expected move tested this week. So if you're familiar with options expected move, it's very likely each week that the options market kind of predicts where price action can end up. And it's non-directional, what they say. We started off the week right here, okay? The options expected move is maybe 60 some points or so. I can't remember what it is. I have it on a different board, but and then there's the lower end. So it's likely to touch either end, not necessarily both. Okay. So it's a very volatile situation if you touch both sides in 1 week. But I'm not going to tell you the mechanics of it with the options market. There's a lot of hedges that come in when price gets to that point. I have a video on options expected move if you'd like to see that. I'll post it at the end of the video, and card up top. Okay, so with what I was talking about early on the daily time frame, you see we're really testing the top of this channel. And yes, it can be redrawn. There's different ways to do it, but we're having trouble there. We already have reactions, for 4 hours now. And so if we get our reversal, looking to close this gap, probably get some sort of reaction. We're looking for a 3-wave move down. This would be a good point to get a reaction off of at the 509. And really, just to be honest, that could be it. You can get down to the 509 and then head up. Okay, but that would be, again, if we're looking for that relationship with time, this is 513. That's Monday. So if we make it down to the bottom of the options expected move this week, by next week, we could really finish and get up to this point at about 518. All right, that's kind of what I'm putting the story together. It doesn't have to go exactly that way, but a back test of this channel breakout, the bulls will say, hey, we're breaking out of this nice bull flag. We're back testing it off to the races to new highs. I think this is where it stops. All right, and that's all within just filling out this bear flag. And then you can also look at this as a triangle. That would be the triangle top. You break down from this flag or triangle, however you want to look at it. I think that's going to be our kiss goodbye. And that can happen as soon as next week. And then we head lower for probably a few more weeks after that. All right, let's look over at the Elliott wave picture. And now this has our time and price relationships on here. Now, another reason why I think we move higher is we already kind of violated this 62% retracement, okay? So I moved the A to here, where you have an ABC up for an A, B here, And now this could be where the C wave just continues to the upside and like I said, just grinds all the way up and completes to the top here. That's a possibility, sure. I think that's less likely, but if it does, great. That's a sell signal there. We're not worried about it. We're already in, long-term short positions anyway. We would just add on to our position up here. I think more likely of a situation is that this is a 5-wave move up here. All right, we violated the 62, so that's no longer a valid area for us. We think price is strong, and I think we reverse and get into some of these retracements. Now, this retracement's only from this straight up move here that we got from last, I think Thursday or Wednesday, from Powell of the FOMC into now Monday. So we have this 5-6 and 5-7 cluster. All right, we have this cluster of time relationships, and we're at a high. Okay, so I do believe that we get our reversal here going into turnaround Tuesday. And if you notice on the lower time frame, we didn't have this on the daily. We have another cluster going into 5-8. That would be Wednesday. So high today, I don't know where that's going to end. I think we're at the highs right now, or at least near it. A low into Wednesday, a time relationship, down into Wednesday, into some of these retracements. I think the gap fill would be a good one at the 62% retracement. That's right around 505. That's that zone that I was talking about, 504 to 506. So that's right in the middle of it. And then work our way up Thursday, Friday, Monday into the 786, which is the 513 Monday time price relationship at 518. That's how I look at everything, you guys. This can change at any moment. And that's also the gap fill, right? So that's what I was talking about. This can change at any moment. This is how I look at things. I have so many different ways to look at this. Now you have, what's that one? The 162%, that's a target up there as well. So you have this swing, the B wave here, the B wave. Okay, so you had A, 3-wave move up for, and then a B, which was a 3-wave move, right? We had A, B, and then FOMC was a massive move, and then we got a new low. So that's the end of B here. So you take that B wave from top to bottom, and the extension from that B wave, there's two targets, really. I already took the one off because we're above it. It was the 127 extension. And the next one is a 162% extension. That coincides with the 786 right in our territory that we're looking for a top. So these wave B or 2, however you want to look at it, I'm projecting to end at that point. All right, straight there or lower high, higher high, higher low on this time frame up to here. So last but not least, let's look at the VIX in this video. Here's the VIX, the VIX. So what is this going to look like? Well, first of all, we got a reaction off the bottom of this falling wedge. This is a bullish falling wedge. We are looking for this eventually break out. So if our scenario plays out, that means that we'll get a reversal into tomorrow and Wednesday. And so this VIX will probably start testing the options expected move and the top of this wedge. Get a rejection, and possibly it could make a higher low or make a new low. I think it's more likely to close this gap if our scenario plays out. It could close both gaps. I'm not really sure. But we'll be looking to close some of these gaps. I think that's more likely. You see this trend line was very valid. Resistance, support. I think that's where we test with this options expected move in the top of the wedge. VIX makes a new low. filling out this wedge a little bit more. And then we get our breakout, which is the breakdown of the market, exact opposite. So that's us looking at the VIX. We're not going to break out from this wedge yet. Now, if the VIX breaks out from this wedge, then I think we have to be very careful and keep an eye on the triangle bottom for SPY. And if you are into all these levels, these horizontal levels, if we start breaking down from that 504 area, the 505, I think it's very likely that we start to descent. That we won't get a new high, and then that will be the nail in the coffin here at the 500 zone, where we have this low. If we make a new low here, then I think this is goodbye. We'll see ya. We're going lower. Okay, so that's how we'll know. We start breaking down from 505. If we don't just spike through, I think that we test the lows, and if this breaks, that's it. That's all. There's no more highs here. Okay, so that's how I'm looking at it from traditional point of view. We break down from this support 504, which is the channel top, channel bottom, and support. Break down from there. I think our move to the downside has already begun. Bounce. Yeah, sure, you could make a lower high. So we'll keep an eye out for that too. You know, to where price gets to here and then breaks down. That's a possibility too. I know there's so many possibilities, but I think it's more likely that our top is up here. Fill out the triangle a little bit more. Thanks for joining us here at Option Center. Have a wonderful day. We'll talk to you tomorrow.